the managing partner of Pearl Mutual Consulting Limited, a business advisory firm that works out of Lagos, Nigeria. Today we have another panel, and this panel is on agriculture. This is very important to Africa. As we all know, agriculture feeds the greater percentage of the population, and agriculture is responsible for, usually in most economies, contributes the highest to GDP of each of the sub-Saharan African countries. So today we have a panel that is going to be discussing on agriculture. This panel is going to be talking about seed investments, an analysis of the risks and opportunity in the investment of investing in Africa's agricultural sector. And to lead and moderate that particular panel, I have Dan Zook, the Executive Director of ISF Advisors. Dan is the Executive Director of ISF Advisors and has a passion for bringing inclusive agriculture and supply chain financing solutions to the market. Based in New York, Dan directs ISF's portfolio of projects related to investment advisory, financial inclusion, and enterprise strategy in the rural finance sector. He previously worked as a strategy consultant specializing in financial services for Dalberg and Booz and Company, where he led engagements focused on inclusive financial services, social impact, and organizational transformation in Middle East, Africa, and Southeast Asia. Dan has also worked for Standard Chartered Bank in the UAE, and he started his career working on a microfinance program for Plan International in Vietnam. Dan also holds an MBA honors from Cornell's Johnson Business School and a BA from Princeton University in neuroscience. Wow. Thank you. Please welcome Dan for me.
Thank you. Thank you for the introduction. If you're in this room, you know that agriculture is essential in the African economy and to livelihoods and food security. It's 20%, over 20% of GDP. It's about $40 billion in trade and exports. It's more than half of the workforce in Africa. But only 1% of commercial lending is to agriculture. And that's, as you probably well know, it's considered risky. Both the perceived and real risks of agriculture make it notoriously underfunded. But in the face of a growing population and climate change, it's in market disruptions such as the Ukraine crisis, it's very important that we think about how to address opportunities in the agriculture sector. My distinguished panelists today have found opportunities in the agriculture space, and actually we're not going to talk just about what you typically think of as agriculture and land-based commodities, but we also have aquaculture and forestry represented on this panel. So we're going to talk about the opportunities in that space. I'm pleased to introduce to my immediate left, we have Lisa Mazzoleni. She's the Deputy Director for Aquaculture Investment Promotions at the Department of Forestry, Fisheries and Environment in South Africa. To Lisa's left, we have Paul Ohaga. Yeah. Paul is the Senior Director at New Forests, where he oversees the strategy and execution of New Forest expansion in Africa. To Paul's left, we have Amos Jao, is Regional Manager of West and Central Africa for the Partnerships for Forests program. He's based in Ghana. To Amos's left, we have Maxine Shahab. She's an investment manager at Finance in Motion, which is a German impact investor and fund manager. Maxine manages the Sub-Saharan Africa portfolio focused on biodiversity, natural resources, and climate. And at the end here, we have Kaz Numusawa, is Chief Investment Officer in the Agriculture Finance Department at the Africa Development Bank. And Gaetan just joined us at the end there, just in time. Thank you, Gaetan. He's a manager at BO Invest, the Belgium DFI, where he oversees direct SME and corporate investments in agribusiness. So I'm just going to kick off with you, Gaetan, as we sort of set the scene here. Tell us briefly about BO's strategy when it comes to agriculture and the opportunities that you see on the continent.
Yeah, so thanks. So Gaëtan, nice to meet all of you. So in terms of investment, we focus on 1 to 15 million deals. So mainly long-term debt, so patient capital up to 10 years. And we have seen quite a few deals recently in terms of inputs, fertilizer or any, because basically there is a big need. Alternative fertilizer also is trying to get some traction at the moment, and that's I think for the best. Warehousing, logistics has been a challenge over the last few years, and so clearly there is a need there, and let's say on-time delivery is more challenging, so you need more buffer along the value chain. All that is dry fruits, nuts has been quite also active with the growing trends of healthy diets, and of course as a DFI, we have always the balance between local currency and foreign currency, and so any business that can have a mix of local food system and also export is quite important, otherwise you end up with, let's say, mismatch in currency. And then maybe the last thing I would want to mention is also the mix between, let's say, when you're a processor, we see a lot of them trying to combine smaller farmer, let's say, business model driven with some kind of in-house plantation to just mitigate the risk of the two business model and also reinforcing their impact. That's basically what I could see over the last year in terms of market trend.
Thank you. Very similar to Kaz, you and I were talking before about what the AFDB is focused on. You mentioned agro-processing zones and companies that are looking to source locally. Can you tell us a bit more about what Africa Development Bank is doing in this space?
Yeah, thank you so much, Dan. Pleasure meeting you, everyone, and also the reputed panel members. A very pleasure connecting everyone on this audience, and very happy that Dan, leading this conversation. And thank you so much for this excellent facilitation. And of course, agriculture is the most important sector, including agriculture plus the food industry on the continent. As Dan mentioned, we're trying to set up the sort of the infrastructure or the platform. It's called the Special Agro-Industry Zones. So we identify about 22 sites across the 16 countries in Africa. We have already approved a portfolio of about $600 million together co-finance here, the Green Climate Fund and the governments altogether additional around $600 million. So let's say $1.2 billion now we are committing to basically provide the platform of those agro-processing zones. How does it work, the processing zones? Basically, you have your portfolio of companies, or you may have a linkage with the farmers, etc. What we are missing in Africa is basically the value addition, but also the productivity enhancement. Like Bio Investment also mentioned, that agriculture inputs need to be provided in a much wider network, and of course, affordable cost. And so what we want to do is basically to try to help the farmers to increase the productivity and then the volume in the context, of course, the increase the food prices. But at the same time, once you produce the grains, you don't want to just export, you don't want to just consume as it is, because the value addition is much, much needed on the African continent. So what we want to try to help is that if we can put the value addition in those agriculture commodities by using those agriculture processing zones, then of course you get the better margin. Maybe there's some value chain players, processors, or grain millers, or even logistical companies. So instead of going to the import of the goods from outside Africa, what we want to try to achieve is a Feed Africa. Feed Africa meaning we want to produce more agriculture products on the continent. We want to put the value addition on those agricultural commodities on the continent to meet the demands of the local consumers. So what we are trying to achieve is actually kind of partnership, like yourselves, either investor side, or you are the player, you are maybe producer, or maybe you're a processor, or even logistical companies, or cold chain companies, or even the real estate companies who are willing to invest in some of those zones, for example. And then we want to provide a network of those investors and also players. And we are actually already convinced, the governments, that they do need to address some of those market challenges, anchoring these agriculture processing zones to enable other players, including farmers, processors, logistical companies, to operate in those zones. And then eventually we benefit all together. So in a nutshell, we want to basically transform the agriculture sector from the production, processing, logistics, and packaging, entire value chain.
Thank you, Kaz. I'd like to pivot a little bit from agriculture and agro-processing and talk about aquaculture. So we have Lisa here, who works for the government in South Africa, promoting aquaculture and has taken some initiatives to promote investment in aquaculture. So could you tell us a little bit about the aquaculture opportunity and what has South Africa been doing to promote it, and what does an investment opportunity look like for folks in the room?
Absolutely, thank you, Dan. Yes, so in terms of South Africa, seafood security and food security is a very big priority for us. As such, aquaculture has been prioritized as a sector for amazing growth in our country. In doing that, we have come together, all the role players, government, industry, civil society, academia, and we've developed an oceans economy strategy, with aquaculture being one of the focus areas. So in the strategy, we have certain goals that we want to meet in terms of creating jobs, increasing production, as well contribution to the GDP. One of the initiatives under our strategy are aquaculture development zones, similar to what African Development Bank has spoken about, where we are setting up sort of bulk infrastructure throughout the country where it's easy for an investor to plug and play. You've got your roads, you've got your water, you've got some of your energy already done, your environmental authorizations. As it's a blanket approach that's already taken care of, because it's often a stumbling block for new entrants into the aquaculture sector. So yeah, so we've got zones all over the country, and they are strategically placed in ports of entry. So at your airports, at your harbors, they're close to our special economic zones as well. Some of them are within those zones. So yeah, so that's a great investment opportunity. We've got, so it could be sea-based, like in the Western Cape, we've got the Saldanha Bay Aquaculture Development Zone. We have numerous mussel and oyster farms in there. We've also done a pilot salmon project in there as well. So that's going quite well. Then in terms of incentives, so in order for us to attract investors, we have an incentive that we have. It's called the Aquaculture Development and Enhancement Program. This is where we give up to 40% back, and it's a reimbursement fund to an investor on what they have invested in terms of aquaculture. This could be your CapEx, some of your OpEx, even as far as mentorship. So up to 40% of your money is given back, and that's where we want to say, please come, government is setting aside this money, we want to grow our aquaculture sector in order to ensure food security, as we know that aquaculture is the way forward in terms of seafood for the world.
Thank you, Lisa.
Thanks.
Another adjacent sector to agriculture is forestry, and we have two gentlemen here who work in the forestry sector, Paul and Amos. I'll start with you, Paul. I mean, we know that in terms of use of land, forestry and agriculture can be at odds with one another. Clear cutting of trees in order to turn into cropland, and as we try to reforest now, it's potentially reclaiming agricultural land. But I understand at New Forest you're integrating the two. Can you tell us more about your strategy and how you think about forestry and agriculture together?
Thank you, Dan. So New Forest was founded in Australia in 2005. It's now the second largest sustainable forestry asset manager in the world, with about $9 billion spread across 2.8 million acres of forestry around the world. Now, at New Forests, the basic model we follow is that we're trying to promote efficient productive use of forests, but also long-term stewardship of forests. And underpinning this is our view is that efficient land use is going to be very critical in the path to developing a sustainable future. And so we approach it from an overall sort of land use perspective. We've just started our strategy in Africa. Africa is very important for us, slightly different from what we've done in developed markets. In Africa, the line between forestry and agriculture is very broad, and it's hard to say where forestry stops and where agriculture starts. And so because of that, we take what we call a landscape approach, integrated landscape approach. And what does that mean? That means that we see land as sort of the basic ingredient for our investment thesis, and we try to integrate whatever needs to be integrated around those landscapes. So in a typical landscape, we'll put some plantation forestry, we might engage with some outgrowers, we'll do a bit of conservation in there, we might even have a bit of agriculture in some of those forest plantations in the early days. And for us, we see that integration as critical to our commercial model, and just partly because forestry by nature, given the structure of Africa, is rural. Across the world it's rural, but in Africa it's rural, but also a lot of livelihoods in Africa are rural. And so we interact a lot with food systems and livelihoods. And so for our commercial model to work, we must make sure that the food systems are not disrupted and livelihoods are not disrupted. So we integrate all that into our business model. We allocate money to programs to integrate that deliberately. So in addition to the core funding that goes into forestry production. And for us, that's just how it has to work in Africa.
Yeah. I mean, forestry is also, it's a long-term play. How does that affect the profile and the types of investors you're working with?
Yeah, so forestry is a long-term play. However, it is a stable asset. And so if you look at the nature of the characteristics of forestry investments is, they almost have no correlation to any asset, to inflation, to fluctuations in the market economies. So fairly long-term stable economy. So we then attract the kind of investors who are looking for less speculative investments. They're looking for stable returns. Our funds, strategies are built around providing yields, regular yields, like you'd find in a sort of yield giving asset. And it's more than suited for long-term asset managers, pension funds. Right now in Africa, we've started with a bit of development finance money, but we're beginning to attract more private capital, looking at pension funds that are getting interested to hold some of their funds in these long-term assets that are stable and are real assets.
So Amos, you also work in forestry for the Partnerships for Forest program, which is largely UK government-funded program.
Yeah.
Can you tell us a bit more about what types of activities you're involved in to promote investment in forestry?
Yeah, okay. Thank you very much. And good afternoon, everyone. As you know, deforestation is a major social problem here in Africa, across the continent. And if you look at the statistics, agriculture alone accounts for almost half of the deforestation that we have here. So at the Partnership for Forest, what we do, just to give a bit of background, it's a UK-funded program, 8-year program, and the objective is to try to catalyze investment, in the business that we think are sustainable, and then have socially and then economically also viable, whilst at the same time, it takes also into consideration shared benefits, with the communities. So, technically, what we do is that we try to de-risk agriculture, so that in a way that agricultural activity is going to be, done in a more sustainable manner. And then there are so many ways of doing it. One of the key challenges that we see, when it comes to the agriculture is the issue of, partnerships. We see a lot of times that, there are people who don't have the right partnership. The second challenge, and I'm going to elaborate a bit, is the issue of having even the right business model, in place, which is also seen as a challenge. And then when we have the business models, the issue of also even getting it piloted, that is tried in a way, has also become a challenge. And then once the pilots are tried, then we need to also scale it up. So in Partnership for Forest, what we do is that we provide technical assistance and also non-returnable grants, to companies at a different level of their maturity, Some can be startups, some can be companies that are actually matured to actually go through these phases, so that in order to make their business more profitable and more sustainable in a way, to a level that they can be investable by the commercial banks. So that is basically what we do at the P4M.
Thank you, Amos. So the partnerships and technical assistance, sort of de-risking grants, I'm hearing a lot of the kinds of things that we hear about in blended finance. And I know in agriculture, because of all the risks, it's often difficult on a purely commercial basis, but there's a lot of blended or impact finance being raised in this space. So Maxine, you're involved directly in managing a couple of funds, I believe, at Finance in Motion that use a blended or impact structure. Can you tell us what kinds of strategies you use in order to invest in the agriculture sector and navigate around these risks?
Thank you, Dan, and good afternoon, everyone. Indeed, at Finance in Motion, we're managing blended finance structures, which means that there's public money, but also private money. That's how the capital structure is done. And what that allows us to do is, by having that public share in there, it allows us to go in smaller zones or more riskier areas into agriculture, for instance, in Africa, where patient capital is needed. And it also allows to leverage private investors to come in and also invest in this asset class. Beyond that structure, that capital structure that we have, you need to go on the ground and have local people. And so we spent the better half a year from our side, taking the tie off, kicking the heels off, and getting ourselves a dairy expert, a cashew expert, a maize expert, an avocado expert, and local expert that have the trust of the agri-businesses in each and every country. And you have to do a pipeline mapping and a mapping of each and every value chain. Without doing that, you don't really understand what is it that these businesses need. Where can you step in, not just with funding, because sometimes you'll find issues such as access to markets. We talked about you're setting up processing zones. That needs to go somewhere thereafter. So what we do is we have the boots on the ground, as they say. We have the local experts, the value chain experts that support us. And of course, we have that connect to the financial intermediaries, because as we all probably agree in this room that they're not doing enough. And you mentioned 1% credit to agriculture, that's nothing. And so by working patiently with these banks and through TA facility and capacity building facilities, what you can do is identify certain growth areas within their green strategy and then work with them patiently to grow in that space. And also, at the same time, work with them to build their capacity on how to assess and evaluate sustainability risks, environmental and social risks, and how to basically connect certain parts of the value chain. So just recent example, coming back from Ghana, we held a poultry summit whereby we brought our financial partners, insurance companies, large processing companies, smallholder farmers that are producing feed, guarantee companies, and so on and so forth. And what that summit allowed us to do is, beyond talking about, cost of feed, how to manage your farm, how to manage, for instance, the current bird flu that's going on, it did allow us to spot some opportunities where there was an access to market issue from the smallholder farmers that are producing the feed and the larger processing companies that are looking for that. And so, in that sense, what we at Finance in Motion do through the Eco-Business Fund is we can finance the capital and the working capital and the capex needs of the farmers, let's say, for equipment and for maize for business production and so on. And we can also finance the process companies directly. And we can also get the banks involved in that space.
Thank you. Carlos, at the Africa Development Bank, you also have some blended finance initiatives. Can you tell us more about how you approach blending in agriculture?
Sure. Yeah, it sounds like I have already identified an opportunity to work with Maxine because I have lots of farmers looking for financing. And then, so as you know, that everyone in this floor, we want to help the farmers, but it's also difficult to actually directly access to each one of the farmers, of course. And so there are several channels we're working together to address that this sort of value chain demands from the production to processing to everything. So we have sort of dedicated private sector financial agriculture team, agriculture finance team, to work with usually a little bit more sort of established companies who are interested, of course, the backward linkages or maybe procure more maize, like you mentioned. And we also support a bit of the R&D from our public sector channel, addressing some varieties. Let's say heat tolerant wheat that we produced in Ethiopia. Now their productivity of the wheat became almost like a doubled. So 2 tons per hectare became 4 tons per hectare, which is a good sign. But then you need more milling companies or processing companies. Once you grow the productivity side, then now you have to finance the companies, right? But of course, sometimes those are segmented markets. It's not necessarily aggregated in a way to all of a sudden commercialize in a big scale. So we are trying to also blend some of those instruments. Let's say we provide a guarantee sometimes for the financial institutions, like you mentioned, so we can provide a partial credit guarantee so that local financial institutions, especially you need a working capital like a local currency, like you also mentioned. We don't have like the capacity to get the deposit, like say, Nigerian Naira or, Zambia Kwacha, Mozambique Rentica, etc. So we try to help the, commercial banks, like Maxime mentioned, to push forward to lend to those farmers or agriculture small companies. But we also ourselves already mobilized about 100 million Canadian dollar to actually have set up our own sort of vehicle, like a blended financing vehicle. But this is not standalone because we want to catalyze as many as investors together. So what we are trying to do is to use a part of that pocket of the money for a blended financing facility. And then we actually, from our private sector window, we want to actually add on, let's say 101, and then to maximize the benefits. But of course, we are open to discuss other potential co-financiers like yourself as well, and to sort of collaborate and address a little bit more systematic manner to address the value chain challenges. Because if you help just one company in, let's say, maize value chain in one country, it will not solve the real problem. But if we work together in multiple players, BO or the Maxim, together to address different segments, because we have comparative advantages, right? So from our perspective, blended financing is not only one solution, but one of those different instruments we have about the package. A guarantee could be, local currency could be, and then blended. Also, we also provide equity to private equity funds so that they can actually put a bit of seed money to grow some of those companies as well.
Thanks, Kaz. So I have one more question, then we'll take questions from the audience. And it's related to climate. I was at Climate Week in New York just a couple weeks ago, and just found the conversation around climate finance is just moving so fast now, and also a lot of it is revolved around renewable energy, but I increasingly find that agriculture is really big on the climate agenda, and agriculture is responsible for, I think, 1/4 to 1/3 of emissions, but that's mostly not from Africa. That's mostly coming from the high intensity agriculture and fertilizers and other places. In Africa, it's largely, outside of livestock and deforesting, in Africa, it's largely it's an adaptation challenge, and it's a food security challenge. So I'm curious how how the lens of climate is factoring into your decisions, to your investment opportunities. Maybe start with Gaetan. I'd be curious to hear BO's perspective on that, and any of the other panelists, maybe Paul or Amos, especially from a forestry perspective. Love to hear how the climate lens is shaping your work.
Well, there is two dimensions, and one is mitigation, the other one is adaptation. I think in terms of mitigation, there you first have what is the, let's say, contribution to common goods of farmers of sinking carbon into the ground, and there I think there is more and more question about how can there be pilot trying to set up in place system where actually smallholder farmer or farmer in general can have access to, let's say, their creation and be incentivized to maybe maintain the quality of their soil, because it's not just for their own goods, it's also for the carbon it's sinking. And there, basically, it's still a laboratory. There is not much yet done, and we are watching that space. Next to that, there is the adaptation. There it's basically the agroecology, the basically crop diversification, and basically de-intensifying the carbon footprint of your agri value chain. And there, well, there is different part of the value chain. One is the input, the other one is the way you process, I mean, you farm. The other one is after that, the last mile, or the mileage of first bringing your food to another continent, country, and then the last mile. And actually, often people look at it as a shortcut. It's like, oh, you eat, I don't know, a blueberry from Peru. It's a drama, but actually, the transport from Peru to the port in Europe is not the major footprint, and actually is very small compared to people taking their car and going to the supermarket and buying their pack of blueberries. So there is a lot of demystifying that also needs to be done in terms of climate change impact of the agri value chain. So yeah, mix of answers, sorry for that, but it's so complex that, yeah, I will stop there.
Absolutely. Paul or Amos, do you want to weigh in?
Okay. I think at P4L we are very conscious of the change in weather and also even leading to climate change and so forth. So our activities or programs actually take that on board. And actually that's even the core of what we do. That we, in a lot of the program, we try to promote, for instance, agroforestry systems, let's say cocoa landscapes, for instance. And then the view is that when you do agroforestry, for instance, it kind of can create some kind of microclimate even within the farming environment, which may be good for production. So, and in doing our agroforestry, we try to actually promote trees that will not only create that microclimate for the product, but that will also give some commercial benefits, to the local communities, because in that case, it serves as some kind of incentive for the farmers to keep, doing that kind of things. We also even support bigger plantations, and we can mention the name of a company like Form International and then Form Ghana, to do some tree planting, within the region. And then we believe that, through those activities, in a way we can contribute towards changing the climate and then also the weather.
We have about 10 minutes or so. Any questions from the audience? I see a hand up over here.
Hello. Is this working? Yes. My name is Susan Payne, and I have a permanent capital vehicle in Mauritius. And we hold a series of farms and farming projects that are sizable, and we operate those so that we can control the whole ecosystem that we've referred to. I think the elephant in the room for all of us, or for many of us here, is funding. It's not actually about the talent of the farmers on the ground. There are some very talented farmers on the ground. And what I wanted to ask the panelists is, and actually state a statement before a question. Most farms, many large farms, home farms, like our farms that are between 1,000 and 3,000 hectares, most of those home farms provide huge support to smallholders around us. We provide a market, we provide training, we provide all sorts of support for various smallholders around us. So we're very important to the smallholder communities, and I really respect those communities. They're vital, actually, we all know that. But what we're missing is funding between $1 and $3 million. This is not large funding for these home farms to expand and flourish. And it is very, very difficult to secure that funding. The funding on the ground in Africa is prohibitively expensive, so the banks, and I know, Maxine, you refer to the banks, this dialogue with the banks are inaccessible to farmers. Why? Because no one wants to borrow money at 12 to 15%, or in Mozambique, actually 20%. So that is inaccessible. So we rely very strongly on development capital. So I guess my question is this: are any of you involved in any way in projects that will allow funding to be accessed by farmers like me, and probably others in this room, that have very substantial wheat and banana and cotton and various other products that they create, that they grow, that are vital to the regions. Where is that funding?
Yes, I think. Do you, Maxine?
I'm happy to take that, and thank you for that question. If you want to do impact investing and real impact investing, you have to intervene in multiple layers. So the banks or financial institutions are one arm, but we have that possibility of funding businesses directly, and I believe Gaetan also from BU is also representing direct lending. And this is why, for me, I said being on the ground and having that connect with these businesses and being at the workshops and meeting with these associations does provide us that connect to these businesses that are fundraising. Now, in addition to fundraising, you yourself have a very established large farms. What we're seeing is as well us as impact investors that have, let's say, certain capacity building initiatives from our end, we're able to also help sustain and improve and adapt to climate change. I guess that's it.
5 minutes.
Oh, that's okay. So, for instance, we were at a farm that we were in Ghana actually at a cocoa farm, and then because of the change in temperatures and because of many other external factors, we're seeing dropping yields. And so what we do is how can we actually support that business to level these yields and adapt to these changing temperatures. So while we're financing a specific trading, let's say, activity of that cocoa farmer, we're also helping to support them leverage their warehouses and start to plant soybean and maize and so on and so forth. And that for me is how you do agri-finance, by having both these levers of intervention.
And in a nutshell, to answer your point, is typically we do a ticket from 1 to 15 million. A lot of agri, let's say, business would need like 3 million. That's really where we can start to really kick in, because otherwise the due diligence is so harsh that for 1 million it will be too much work. So happy in in the room if you have any requests. I'm sure Finance in Motion and ourselves would be happy to help.
Other questions? Yes, here in front.
My name is Tola from Nigeria. A lot of the challenges that smallholder farmers, again, do have, why, apart from the fact that commercial banks will charge exorbitant rates that are not agri-friendly, another challenge is guarantees, collaterals. Is that something any of you would also, do to support funding opportunities for farmers or agri organizations?
Does the African Development Bank have guarantee programs?
Right. So actually, we have been working together with the Central Bank of Nigeria. If you know the NISEL that we established together. And of course, you can tell us how functional or not so functional, etc. But at least they're trying to achieve, right? And so I can see that people are laughing, so that shows a bit of a sign. But so we, as African Bank, will not necessarily provide a directly guarantee to the farmer because we provide a guarantee to usually the private companies, not the individual. But we can provide a partial guarantee to, or portfolio guarantee to those local financial institutions if they have a substantial interest in to help the farmers like yourself or your communities and etc. But the funding or the perception or the risks could be also mitigated when some of those proposals are presented in a way that the bankers can also understand and communicate each other with the kind of common languages, right? Because when you say how many bags you produce, and they will not understand, right? And how many, nairas, 1,000 nairas, then if you convert, like, unit cost, fertilizer, because you talk about the, how many bags, so, that's your language to communicate the farmers. But then if you talk to the, some of those bankers, then you have to translate to help the farmers. Okay, I understand. This is your quantity. This is your cost. Okay, I'm going to help you to make the proposal as if, financial proposal. Yeah, the bankable projects, right? So in that sense, of course, we try to help also the financial institutions to understand the language in agricultural communities, right? Because farmers are very experienced, so they assume, right, some certain level of understanding. But the bankers, they are not necessarily understanding that the commodity cycle or the cost cycle or seasonality or water demand, etc. So you need to also educate financial institutions as well at the same time. So there's a bit of a gap. So we are working together, both financial sector to come closer to the farmers, but also we are trying to help the farmers also get a bit of understanding in each other. So we try to have this kind of platform, providing that kind of system, the both ends can communicate a clear understanding. Because once they understand, the bankers can understand your side of language, then actually there's interpretation, the risks, the reward, the balance, right? So in addition to some of the collateral, etc. But so what we're trying to achieve is that coming together the both sides. We provide liquidity to the financial institutions, we provide technical assistance to the farmers, and also we also provide support to the governments to address some of those market challenges, bottlenecks, the infrastructure as well.
Kaz, I think we need to wrap up, but Lisa, you wanted to comment also on this?
Yes, we found the same issue now with our aquaculture farmers. They were struggling to find finance. One tool that we've developed is a feasibility study tool that we've done for around 8 or 9 different species. And then you sort of input your feed costs, your different costs, as well as your different system that you're using, and see what is the minimum financial viability. And you can play around with that model. And that also, we encourage our farmers to first look at that while they're creating their business plan, so that they can create a bankable business to take forward to investors, basically. So that's quite a very useful tool to have feasibility studies done on different species.
All right, thank you all for the conversation. Our panelists will be here to take your questions one-on-one after this. Please join me in thanking the panelists.
Thank you so much. Very good discussion, and I think the missing link is the BDS service, because a lot of these African farmers, they can't really put together a bankable business plan. So I think that's what I've heard from quite a number of people, from African Development Bank, from I think that's Finance in Motion, and that's what you're saying as well. So we need to put it together so that we can actually get access to finance. Thank you so much. Please help me appreciate this wonderful team again. Thank you. I'm your chair, so you should remember me.
Okay. I think doing direct